Okay, so the market has a huge sell-off. Then the next day, the market has a huge rally. And then the following day, the market has another huge sell-off. What the heck is going on? Well, I'm going to tell you what's going on with cryptos and with stocks. And then I'm going to tell you how you should be taking advantage of this. So let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. And yeah, wow. So I did a video just on Sunday titled XRP Pumps. Yeah, so this is on Sunday, right? And of course, some key cryptos like Bitcoin and XRP and Solana were having huge rallies on a tweet that Trump put out about this strategic reserve that he's putting out. And so everyone in the crypto space was very giddy, at least for the moment. Now, one of my subscribers commented, in that video, boy, that video didn't age very well. He's right. One day these cryptos were having huge pumps, and then yesterday they came crashing down again. But the message in that video is still the same. And that is that this is going to be a very headline-driven market here for the foreseeable future. But the bias is to the downside. So for those of you who have been watching my videos, I don't want to beat a dead horse, but just to remind you, let's take a look at the technicals on this market. And then I'm going to talk to you about why. Why is the market so heavy here? So in my recent video here titled Market Fear is at Extreme Levels, I did point out to you that the fear and greed index is at the extreme fear level. That has not changed. And to remind you, this is how the market works emotionally. And remember, all markets are emotionally driven because all markets are made up of human beings, and human beings are emotional creatures. Now, before you say, yeah, but Ed, it's all algorithms right now. Well, who do you think writes the algorithms? Human beings. And of the three emotions that drive the market, fear is the dominant emotion. And again, from that same video that I made, all right, look at the downside potential. So again, although we've had a rough month, we're still very close to the recent highs in this market. But this uptrend has been broken. And again, to reiterate, if this market does sell off much more from here, it will affect the crypto space. Okay, so obviously that message of mine has not changed. So 3 days ago, we had the market sell off 800 points. Now, I'm rounding out, okay? The market was down 800 points. The following day, the market rallied over 600 points. And then yesterday, the market was down over 600 points. So really wild swings. But the overall bias on this market is on the sell side. As per those charts that I just showed you, we're at a very important short-term support level. Now, I need to remind you that these days, most trades are done by computers. And computers, they can trade faster than human beings. They can buy faster and they can sell faster. So when an important support level or resistance level is broken, you can see an accelerated move in either direction. I mean, the computers are programmed to look at certain levels. That's why technicals are so important. You need to learn how to read charts. You need to learn how to recognize important support levels and resistance levels. And they're not all created equally. Some support levels are much stronger than other support levels. So there's a real science to this. And the science is based on human psychology. So when you step back and you consider, the underlying issues that's kind of affecting this market, what's really placing a cloud over the market and it's really limiting, upside potential, are economics. Now I'm recording this on Tuesday, March 4th, okay? And the market hasn't even quite opened yet. I wanted to get this out early. And today is the day that those dreaded Trump tariffs went into place. Now, these are reciprocal tariffs, right? They're not punitive. These are tariffs put on other countries that have tariffs on us. Nevertheless, they're new tariffs, and that is kind of spooking the market. But, that's just a headline issue. The truth is there are underlying issues that the professionals know about. And these are issues that I have been raising on my channel for a while now. And even though I don't always get the timing right, I know the underlying issues that everyone else is kind of ignoring. But now they're fashionable. Now they're fashionable to talk about. So any one of these issues is concerning all by itself. But when you put them all together, it creates a really ugly scenario. Okay, so remember, we have credit card debt at an all-time high. For the first time in history, it really went over the $1 trillion mark about 5 months ago. Now it sits at, I believe, like 1.3 or $1.4 trillion. And I told you before that at the same time that was happening, the average interest rate on the credit card debt was 23%. Well, I was wrong. I have to update that. The average interest rate on those credit cards is 28%, which is loan shark territory. I don't know how they get away with it. I don't know how it's legal. If you and I, if I tried to give my neighbor a loan at 28%, I would be put in jail. Another issue that's not getting any real press yet is the housing market. U.S. pending home sales have fallen to a new all-time low. Look at that chart. So prices have not quite fallen yet, but they will. As sellers start to become more frustrated and then desperate, we can see a cascading effect downward. Another fun indicator that Wall Street likes to use to determine the health of the economy is looking at Las Vegas. I know it sounds oversimplified, but it's true. These are the kinds of things that Wall Street looks at. Vegas feels like a simulation glitch. No packed tables, no high rollers, just $27 cocktails and empty slot machines. Even the scammers look bored. If any of you are in Vegas, could you chime in the comment section below and let me know what you're seeing? Are you seeing less activity in Vegas? So what does this mean for us? What does this mean for you? What should you be doing? Now, remember, I'm not a financial advisor. I'm just a guy on YouTube with an opinion. This is life advice. This is friend-to-friend advice. It's just you and me talking here, okay? Listen, this is what's called a trader's market. This is not an investor's market. And what I mean by that is it's going to be a volatile market. So investors are going to be very frustrated. If you're an investor, if you're holding on, I don't care whether it's a crypto or a stock or whatever, things are going to be wild here. So if you're an investor and if you watch the markets closely, every day, you're going to be ripping your hair out. You're probably better off not to watch the market. But for traders, these are glorious days. This is manna from heaven. Traders love volatility. Volatility is a trader's best friend. And even if you're not trading actively, I think that everybody should think like a trader. I don't think anybody should be an investor. For me, quote, investing is a dirty word. Because investing, for me, is synonymous with the word hope. And hope is not a strategy. The markets do not always have to go up. But circling back to the notion that this is going to be a headline-driven market, it's going to be a wild ride, man. You're going to see massive down days followed by very impressive rallies. I promise you that as the market crashes, there are going to be very impressive rallies along the way that are going to be traps. And people who are trying to trade, who without any real education or any real discipline or any kind of a plan, they're going to be eaten alive. I promise you, a lot of people who are attempting to trade without any kind of education or discipline, you're going to have a really rough time. But we're in a period of time here where there are a lot of worries. And every one of those little worries out there are legitimate all by themselves. Now, it was nice that Donald Trump got in. And it was nice that he is doing some amazing things economically for this country. But Donald Trump is not an economic Superman, okay? The issues we have surrounding inflation are much bigger than one man can solve. We have spent decades painting ourselves into this corner. We've had decades of irresponsible, corrupt politicians. I think that hyperinflation is unavoidable. It's going to happen. So fasten your seatbelts. I don't think you've seen anything yet. The reason why hyperinflation has to happen is because the single best tool to fight inflation is to raise interest rates. Well, Donald Trump wants to lower interest rates, right? And we all know why he wants to lower interest rates. But the way you slow down economic activity, which is what you need to do in periods of inflation, is you have to create pain. You have to make life painful for people so that they stop spending. You have to make it more expensive to own a car, to own a house. You have to get people to stop spending money. But that process is very painful. But I think that we are going to have to go through a period where this generation, we have to pay for the sins of the previous generation or previous generations. If we want a shot at a healthy economy, at a healthy financial system, that's what we're going to have to go through. I do not have very high hopes for our financial system. I think that our financial system is in a death spiral. That's why, as part of my mantra, I encourage you to get your money out of the damn bank. Get your money out of the bank. And then you take some of that money, which is a depreciating asset, right, and put it into gold and silver. Please, less than 1% of the global population own any gold and silver. So just by acquiring one little silver coin, you will automatically be in the top 1%. And then the third thing you have to do is establish streams of passive recurring income. And I've got programs for that. And a couple of the programs are trading programs. So you can let professional traders trade your money for you. If you want to learn about those, I can't mention them in a YouTube video because there are rules against it. But if you want to learn about them, send me an email. I'll send you a link for my Hey Ed WhatsApp group. Join the Hey Ed WhatsApp group and learn about these passive income streams. But my main message is you do not have to be a victim in this upcoming crash. You don't have to. You can actually preserve your buying power and maybe even make an awful lot of money on it. So I think it's worth it for you to invest a little bit of time and effort, to join my WhatsApp group and learn about these programs so that you can benefit from all this volatility. If you don't mind, could you support my channel by hitting that like and subscribe button? Ed Anderson, live from Minnesota, signing out.
Copy that.